Welcome to another episode of Stately Investing with your host, Burnett King. If you like the content I'm putting out there, give us a thumbs up. If you love the content I'm putting out there, give us a subscribe. It really helps the channel. If you have any questions, feel free to leave them in the comments section or send me an email at statelyinvesting@gmail.com. And let's get started with the show. All right, everybody. In today's episode, we're going to be talking about growth stocks, particularly tech stocks, and the trade-off with dividends. Is there a trade-off? What tech stocks I have in my portfolio, and of course we're going to cover the weekly performance of my passive income portfolio. So why don't we actually start with that? So passive income, my current value is at 13,500. So basically flat, mostly flat to last week. If we look at the weekly performance here, there's a loss of around $440, and I added about $500. So overall, my return is actually negative of 3% for the week. What you can see here is there was some market loss and then some earned dividends. If we go into the activity for the week, you can see the dividends that I earned. So, payment from realty income, Procter & Gamble had a fairly big dividend, AbbVie, and then Apple. You can see here where I actually did some sells. So if you check on my video from last week, I'll put a link up top. You guys can see why I decided to sell the three stocks that I did. So that would be Valero, Ben Franklin Resources, and Watsco. So I sold those and bought into some other stocks that are already in my portfolio. Again, M1 does this all automatically as it tries to balance your or hit your target values, which is great. I highly recommend using M1. And so you can see what I bought into. Some of the bigger purchases are in Store Capital, Prudential Financial, Crown Castle, and then there's quite a few other smaller ones. I think I bought heavily into Altria as well. So you guys can kind of see what's going on here last week. So that was a bit more trading than normal because I did the three sells. And then on top of that, it had my normal $500 biweekly deposit. So overall, a few dividends, not a ton roll in that last week, but fairly big. That AbbVie one is big. So overall, it wasn't a great week. It wasn't a bad week. Overall, the return's down about 10% for my overall investment time period. Again, you guys can check out this particular pie. You can see how I have things split up and what stocks are included in which sections if you check out the link below. And yeah, let's jump into today's topic. So I was reading an article on Motley Fool about 3 dividend paying stocks to buy right now. So I always check out these dividend stocks to buy, making sure I haven't missed a potential opportunity. And so what this article talks about is, stock prices going down on certain tech stocks, and that means the yield is going up. But people tend to think of tech stocks as growth stocks, and justifiably so, right? A lot of these tech companies don't pay a dividend or pay a really tiny dividend. But overall, you can see that there's kind of this trade-off, right? So if you're in high growth mode, you're kind of reinvesting money into your business and you're probably not paying out a dividend, or if you are, it's fairly small. And so people don't typically put huge tech companies into their dividend portfolio. But the title of this article, appealed to me and I wanted to check it out. I love this image here, dividends, right? Remember, that's the goal we're all after here. So what's funny is that I have all 3 of these in my portfolio already. So the first one is Texas Instruments. They're basically a semiconductor company, right? They make a lot of chips basically for the electronics that we use on a daily basis. As it shows here, they have a 3.33% yield and really solid cash flow. So again, if you watch that video from last week, I talk about the kind of fundamentals and financials of your companies and making sure that you're analyzing those as well. And when I did that, that's what led me to sell those 3 companies that we talked about before. So overall, I think, Texas Instruments is, a buy, in my opinion. They've set aside quite a bit of money, but they also generate quite a bit of money, right? So they've spent a lot on dividends and stock buybacks, but overall they're making quite a bit of money. And that's the thing about these tech companies; they tend to have huge cash flows, right? So it's just a matter of how they choose to spend their money. In another video, we talked about what do you do with this cash? What has the coronavirus taught us, and how to make sure you're prepared for the future, and making sure that your company is not going to take a huge hit if there's some other crisis because you don't have any cash because you spend it all on either dividends or stock buybacks. So you have to watch out for this, but Texas Instruments, I think, is in a good position. As you can see, they've been raising their payouts for the last 16 years. The next company here to look at is IBM. So IBM has a pretty high yield right now, 5.6% yield. They're also a dividend aristocrat, so they've really been paying out dividends since 1916, right? That includes the Spanish flu you see here, which is somewhat similar to what's going on right now in today's environment. But IBM is super dedicated to their dividend, and they're also providing quite a bit of cash flow, right? So their cash flow is not bad. It's not great either. It's been kind of going down over time, but I think that's because they're shifting their business strategy, right? So they've been previously they sold a lot of hardware and software, but I think now their focus here, as you see, is on AI, data analytics, cloud computing. They do a lot of consulting, right? So these are more service-oriented businesses rather than just software or hardware. And so I think as they shift their business model, their revenue will, as they can kind of complete that transition, I think their revenue will take off in the future, and they look good to have a lot of dividends. The last company here is Verizon, also in my portfolio. I think Verizon is a very stable company. So Verizon is obviously in the communication sector, but also technology in general. They have a 4.5% yield and a lot in cash flow, right? So they earn a lot from their mobile wireless division. And I think they are, again, dedicated to their dividend and just kind of slowly growing that over time. And it's a great long-term story. So I would also recommend Verizon. So if we jump into my portfolio, you guys can actually see in my holdings, you can see what technology companies I own, right? So I have 40 companies overall, and I think it's about 7 technology companies in here at various kind of weighting. So the first one here being Verizon. So I'm down about 7%. Again, that article specifies that it might be a good time to buy Verizon because their stock price is down, and that means their yield is up. So always check those yield percentages and see if that might be the right time. If it's a solid company and that yield is high, that generally means their stock price is low, and you should be buying at that time if you have the opportunity and the cash. So you can see Verizon here. Another one that the article didn't talk about was Apple. So Apple's yield is actually fairly low. But I like Apple because it generates a ton of cash, right? So Apple generates just so much cash, and there's a lot that they can do with that cash. Now, they often decide to reinvest, right, and create new products. But I think long term, they will be increasing their dividend. And so that's one where I want to get in early and just have that dividend grow with time. So Apple's a stock that I personally recommend. Another one to call out is Microsoft, right? I think Microsoft's just been killing it lately. They're another one like IBM that's kind of shifted their business model, and I think they've done it quicker. And so Microsoft is just a great company as far as dividends and technology and a long-term holding. So overall, I think people tend to suggest that there is this trade-off between technology and dividend growth, but in reality, I think there are several companies out there in the tech space that have the ability to pay out great dividends. One way to look at this is to actually look at overall. Use M1 to look at the stocks that you can potentially buy, right? So you can look at the sectors here. A lot of these technology companies are in communication services, or you can see them under tech. And I think one thing you can do is kind of pick bigger companies, right? And you can also see their yield. So you can always kind of sort their yield, but you can start with a market cap, minimum of, and I think this is in billions. All right. Let's see. There we go. All right. So we're starting to filter out some companies here. A lot of zeros, right? But if you get over the kind of 10 billion mark, you can kind of see which companies have a high yield, and then you can go investigate from there and understand the business model and understand if that's something that you want to invest in. And you can, CenturyLink's another one here that we didn't talk about. AT&T is one that I own. These are some international telecommunication companies as well. Orange is also international, but a great company, right? So I would say look at these. Use M1 as your research tool, and if you want to learn more, you can obviously watch more of my videos. I appreciate all the views and the likes and the comments. Let me know what companies that you guys think are great tech dividend stock companies in the comments below, and I will see you guys in the next video. Thanks, everybody.